Joining me now for a look at the property sector, Garrun, Managing Director at Independent Property Databank of South Africa. Stan, thank you for joining us.
Thank you.
So first off, let's just take a look at the numbers that we see for the first 6 months of the year. As you say, 1.5% capital growth, 4.4% income growth. What is the signal about the property sector, commercial property sector?
Well, I think firstly, the 1.5% capital growth is in fact higher than 1.4% in the previous year, which was for the full 12 months. So the 6-month figure is in fact up. So it looks as though
ever so slightly, though.
But that's only for 6 months. Remember, the last year is for the full year. So essentially, if you annualize what we've got here, you've got about 3% capital growth. So it's not substantial, but it is higher. So that is an indication of some capital growth coming back into the market. The income return, which is really an income yield, of 4.4 compares very well to last year. So what it's saying is that if anything, we'll show very much the same return as we did last year, which was 10.4%. But there is an upside, and it looks as though things are beginning to come out of the doldrums.
The question mark is, though, is that even as you come out the doldrums, are you going to be able to cover the rising costs? Electricity costs continue to rise, monthly average of 12.80 Rand per meter squared. Then you've got, rates and taxes, and you've got all other costs to take into account. Are these costs skyrocketing at a rate that is not keeping up, or that is outpacing income rises?
Oh, definitely. I know operating costs have been increasing probably for the last 2 years at way above inflation rates. I think I can't even guess what electricity has done, but it's just gone up enormously. Every other cost has been above inflation, almost without exception. Rates, security, management costs, etc. And what's happening is owners are actually getting the costs on the one hand squeezed, and then they are being negotiated downwards on the rentals on the other side. So it's a double-edged sword beginning to impact on them.
Yeah.
A very interesting fact that we picked up looking at these figures is that there is a lot of an increasing amount of recoveries by landlords over this period. So what's in fact happened is landlords are passing more of that to the tenants than they have in the past.
And the tenants are taking it on?
So far. I think the tenants have been very, very aggressive in terms of negotiating good rentals, and I think once this cannot continue forever.
Yeah.
I think the brunt of the operating costs has probably been felt. We're not going to get another big Eskom hike, as far as I know, as far as I hope, in the next short term.
Ultimately, though, it's concerning when you look at that. The office sector is the worst hit when you break it down by sectors, and then retail is doing pretty well right now. What does this tell you about the cycle in the economy? The fact that retail, industrial doing pretty well, and the offices space the hardest hit.
I think the offices, to a large extent, although retail is very tied into consumer spending and so on, offices are most reflective, I think, of the economy, because they very tangibly reflect a demand for space and a demand for
new
for
business, even
doing
small
business.
businesses,
Yes, coming in, yeah. And I think the sluggish, or let's call it the sort of stagnant vacancy rates in offices have been quite amazing. They actually increased over the 6-month period, and they're sitting at something like 15% overall. So that's actually why the office sector has felt this in terms of these large vacancies. But having said that, within that sector, there are prime A-grade offices in very good locations, which are well tenanted and filled with blue chip tenants. So there is a divided market underneath all that.
How should this survey help potential investors in the commercial property space? Well,
I think that it points out what the trend is, and obviously can point them towards the opportunities. And I think it's in the desegregation of the data that one can actually see where the investment opportunities lie. In fact, on the retail side, there have been a lot of investment opportunities outside of the main cities, in the smaller centres. The large shopping centres have kept up, and they've maintained it because they've got a good critical mass. And I think it's those sort of trends that the trading density, the foot counts in the shopping centres, the vacancy rates, which are a health measure, is the numbers there.
Thank you so much for joining us. Garrun, Managing Director at Independent Property Databank of South Africa.